Hi everyone, I hope you're doing okay. I hope that you have learned the previous sessions very well, and also the last session where we talked about the Fibonacci family and the trendline family. And I hope you have practiced on your demo accounts and you don't have any problems. Okay, so today it's July 24th, 2015, and I want to have a Q&A session. So I want to answer to your questions and your problems. I want to do this every 5 sessions so that you don't have any problems about the subjects that we have talked about. We're going to start working with our MetaTrader app. I told you that we're going to open a new account like that. We're going to choose our server. We'll choose that item. You have to choose the new demo account. And after that, you have to enter your information in order to create an account. So, in our first session, we talked about the demo accounts, and these information are not very important. So, you can enter even false or made up information, but you only have to type in a certain amount of words so that it's not read anymore. This is the email address that we're going to type in. And I'm going to type in $10,000 for our first deposit, and it gives me a login information and a password, and you can see all of the needed information in this tab here. Alright, so right now we're on this chart, the USD index. Let's move on to a chart that we can trade on. I'm going to add a new chart. We have to wait a few moments until the chart is updated. Unfortunately, the internet connection is really weak today. Because of the heavy rain. Let's move on to another chart. So the first subject that we talked about and we analyzed, and the most important subject is that, excuse me, we are on the pound dollar chart right now in a 4-hour time frame. And the most important thing that we have to do is to determine the market elasticity and the market trend. So to have a good analysis and to determine the partial and overall trend, you have to start analyzing the longer time frames and then move on to the shorter ones. So I have to draw the trend line in my longer time frames so that I can see what my elasticity is. In this chart, I can draw the trend line in two ways. One of them is connecting the swing highs to the next swing highs like that. You see, this was the price from the past and it was broken, so I have to update it and connect it to the next swing high, which is below the previous ones, and it's above the central swing high. So I can drag a parallel trend line. I can drag it higher, although I can draw another trend line from the top. But right now, we don't need that part of the chart. In our monthly time frame, this is the trend, this is my overall trend, and we have an uptrend here. Let's move on to a shorter time frame. This is the weekly time frame now. We have to draw a trend line from the top and connect it to the swing high that is here. I can't draw a trend line at the bottom of the chart because the trend line is broken. The price has retraced to the trend line and then it has declined again. So if I draw this trend line, when a trend line is broken once and the price does not come back to that trend line, you shouldn't be deceived by it and update your swing high and connect it to your next swing high. So this is my trend line. I connect it to the next shadow, and I can also draw the parallel one. In my weekly time frame, the overall trend is a downtrend. So in my monthly time frame, we have an uptrend, but in our weekly time frame, we have a downtrend. Let's move on to the daily time frame so we can analyze the chart better. This trend line is not very accurate. We have to connect it to this here. Excuse me. I'm going to adjust it like that. So in my weekly and daily time frame, we have the same analysis. These two time frames are usually the same. Our daily and 4-hour time frames are usually the same as well. So if you have a downtrend in your weekly time frame, you have a downtrend in your daily one as well. So in both of these, I have a downtrend. And let's move on to a shorter time frame. I can draw the trend line from here as well. I'm going to consider the last two swing highs, and this is the parallel trend line, and this is the last bit of the chart in my weekly time frame. Let's move on to the 4-hour time frame. So as you can see, I had drawn the trend line in my daily time frame from the last two swing highs, and in my 4-hour time frame you can see the trend line that I have drawn. So in my 4-hour time frame we have an uptrend. I'm going to move on to a shorter time frame. This is the hourly time frame. We're going to consider the last two swing highs because I can't draw the trend line in this area because it's not accurate. The trend line has to have an angle. So I can connect this swing high to this one. And there also, I can draw the parallel trend line at the top of the chart. So this is the 4-hour time frame. I'm going to start from the top again to see what my overall trend is. In my monthly time frame, we have an uptrend. In our weekly time frame, we have a downtrend. In our when I say weekly, it means that in this chart, the overall trend is a downtrend. In our daily time frame, we have a downtrend as well. In our 4-hour time frame, we have an uptrend. And the last part is also an uptrend. And also in our hourly time frame, we have an uptrend. So based on the trend line, I know exactly what my overall trend is in each time frame. And I see that I have an uptrend and the elasticity is upward. So right now, I want to draw the Fibonacci and analyze the charts based on that. You see, you have to use the tool of Fibonacci and trend line together. You have to mix them up together. So let's move on to the monthly time frame again. I'm going to draw the Fibonacci. I told you that you have to connect the last swing high to the next swing high, the one that is opposite to it. I can't draw the overall Fibonacci like this and draw the Fibonacci from high to low. As you can see, the price has reached the 50 level. It has broken my 38 level and it has retraced on my 23 level. When you see that the price is not able to break the 50 level and then it retraces to the 23 level and then it's above my 23 level again, expected to reach the 61 level. So right now, in my monthly time frame, the price is above my 23 level. So I expect the price to go up again to reach the 38 level. So I'm going to delete this and move on to a shorter time frame. I'm going to draw a high to low Fibonacci. Excuse me, I forgot to delete these tools here. So I'm going to draw the Fibonacci again and my trend line. I'm going to connect it to this swing high, and this is the parallel trend line. The previous swing high was this one. Yes, it was this one. But the price has broken it, and the candlestick is completed outside of the trend line. So I can either keep this trend line, not delete it, and draw the new one. But in my downtrend, the price is going down. So this part of the chart, exactly this part, is like a correction in a sideways trend. And as you can see, the price was having fluctuations in a straight line. It wasn't like an optimistic trend that would decline in one movement. So I'm going to draw my Fibonacci from high to low, which is my overall Fibonacci here. It has gone up, it has broken the 23 level, it has touched the 38 level, then it has retraced, because I've always told you, don't expect the price to exactly touch your resistances. Sometimes it retraces before it reaches them, then it has retraced to the 23 level, then it has gone up with more force, and it has reached the 50 level. As you can see, it has reached the 50 level, it has retraced to 38 level again, then it has gone up again. Before it reached the 50 level, then it has retraced to 23 level again. It wasn't able to break the 23 level, it has gone up again. It has touched the 50 level, and after that it has retraced to 38 level. After that it's still trying to reach the 61 level. So the price is trying to touch the 61 level. And this is a very important point. You be careful. The trend line that you have drawn like this has been broken once. So this is a warning that we're going to have a reversal. And in here, when the 23 level is broken, it is telling you that it was going to reach the 50 level. Then it has touched the first trend line. And after that, it has retraced. I'm going to delete this so you don't mix them up together. So in my daily time frame, the downtrend is finished. And also in my weekly time frame, based on the trend line, we had a descending signal. But because these are longer time frames, the market doesn't work properly like this. But the downtrend is finished, and if I had drawn the Fibonacci in my weekly chart, it would have told me that we had an uptrend. Excuse me, I was talking about the monthly time frame. If we draw the Fibonacci in our weekly time frame, we have a downtrend. So the downtrend is finished. It's going up because the price is trying to reach the 61 level. I'm going to delete this trend line because we don't need it anymore. There are some rules. When a trend line is broken, when it's broken for the first time, the retracement will be at the wall of the trend line again. And as you can see, this has happened exactly here. Why do we have this situation on the market? Because I haven't talked about the pivots yet, but we've had a pivot in the past. Pivots are the resistances that don't let the price go further than this area. So I'm going to delete this, and I'm going to draw the new trend line. So I'm going to connect this swing high to this one. And this is the parallel trend line that I'm going to also draw. So right now, the price is going up and it's creating a zigzag pattern. And it's having fluctuations in our 38 level. So based on the Fibonacci tool, I know what is going to happen in the market. I connected the swing high to my swing low. In my trend line, I considered the last swing high. The reason why I drew it like this is because I have an uptrend. When we have an uptrend, we draw the trend line from the bottom. Let's move on to a shorter time frame. This is our 4-hour time frame. I'm going to move on to all the shorter time frames so that we have the least amount of errors. So I'm going to draw this trend line like this. This is the parallel trend line. If you want to draw a more partial one, I can do it in my 4-hour time frame. So I'm going to draw it to the next swing high. As you can see, we clearly have an uptrend. In our hourly time frame, it's the same. So I'm going to delete this Fibonacci. I located the 61 level. We have an uptrend. The price is trying to reach the 61 level. In my hourly time frame, I'm going to draw the Fibonacci again. I'm going to connect the swing high to my swing low. For example, in here, I want to take a new order. I'm in the hourly time frame, and the 30-minute time frame has the same analysis as the hourly time frame. So I'm going to do it on the hourly time frame. You see, right now, because the price is below the 23 level, I'm not allowed to take a new order. I shouldn't trade because I don't have any confirmations to buy. Yes, we've had collisions here, and you may think that the price is going to go up, but because the price is below my 23 level, there's a possibility of a decline, and it may start its upward movement after that. And it may break the pivots in my trend lines because it's not too far away from the trend line, so it may even reach the central trend line. So when the price is below the 23 level, I'm not allowed to trade. I can put future trades though, buy stop and sell stop, which we have talked about. So let's look at the balance here. I'm going to put a buy stop here because the market is going to be closed down soon. I have to be quick. So, oh, the market is closed. That's okay. My balance is $10,000. We were talking about your deposit management so that you can gain a lot of profits in a month, and so you don't get too greedy as well, and you always comply with the rules. And that is the maximum amount of deposit that you can get involved in the market should be 10% of your deposit. 5 to 10% of your whole deposit. After, you shouldn't involve any more than that because that would be too dangerous. So in here, because the price is below the 23 level, I'm going to put a buy order above my 23 level. So this is a buy stop. I can put one here. Right here. So exactly on this price I have put a buy stop. The reason I have put it a little bit above my 23 level is because I want to have the confirmation that the price has gone up completely, because it may come above the 23 level and then decline again. I can even put it above this candlestick here, because if this candlestick is broken, it means that this resistance has been broken, and you see that the price has retraced several times when it has reached this point. So I can put a buy stop above the place where the price has been closed. And I can put my stop loss in 3 targets. One of them is my 38 level. When the 38 level is broken, I can put another stop loss on my 50 level, and when that is broken as well, my final target will be the 61 level. Excuse me, I was talking about the take profits, so I have put 3 take profits on the market. So when the buy stop is opened, we're going to gain profits in here. You can also put your take profits on the market, but we have to see what is going to happen in the market. I could have closed the order here, or I could have opened a new order here, or I could have continued my order until it reached my final target, which is my 61 level. But that will be risky. Or I can keep on opening and closing my orders. When they break a Fibonacci level, I can take a new order and then close it when it reaches the next level. So I will repeat it for you. You see, this is very important. That is why I'm repeating it. Until your 23 level is not broken, you are not allowed to trade because you don't have a confirmation yet. Exactly right here. Before it reached the 23 level, it has retraced and declined. And the amount of money that you lose when it declines is going to stress you out, and you're going to doubt yourself and doubt your analysis. And that is going to lose you money. So we had talked about another order about your Fibonacci and your trends, and I told you if the price is able to touch the 61 level, it means that we're going to have an uptrend. So in here, where we have highlighted the 61 level, there is a high possibility that the 61 level is going to be broken because we have an uptrend here. The elasticity is upward. So you have to expect the price to break the 61 level. Although if the 61 level is broken, you can use the Fibonacci techniques that I taught you. When it goes further than the 61 level and you have a swing high, a fractal in here, you can update your Fibonacci in here so that your next 61 level is shown to you. So that was about the trend lines and Fibonacci's. And I told you how to take a new order. But right now the market is closed down, unfortunately. The next tool that was in the Trendline family, and we had talked about it before, is this one, which is drawn like the trend line. It has a central trend line and it doesn't show you the main lines here. When this central one is broken, you have a confirmation for buying, and it's exactly like the Fibonacci. If the 23 is broken, that is a confirmation for you. You're going to have an uptrend. So this channel is exactly drawn like the trend line. You have to connect the swing highs to swing lows. You don't have to draw the parallel one. The next tool is this liner tool, standard. I haven't talked about this one. excuse me, I talked about the channel tool too early for you, so we're going to finish talking about that first, and then we're going to talk about Fibonacci. So this liner is drawn like the trend line. When you have an uptrend, you have to draw it from the bottom, and if you have a downtrend, you have to draw it from the top and connect the swing highs together. So when the price reaches the bottom wall, you can start buying. When your central one is broken, you can start buying again up until the next wall. But if your central wall is not broken, you can start selling, and when it reaches the bottom wall, you can close the order. But there is a point that you have to always comply with. You should not trade opposite of the market elasticity. That is very dangerous. A lot of traders lose a lot of money when they trade opposite of the market elasticity. So you should not do that. You may think that I'm going to gain just this small amount of profits here, but instead you're going to lose a lot. So always try to go with the flow of the market and trade equivalent to the market elasticity. And don't try to be too smart and by trading the opposite of the market elasticity, because that will be wrong. And for example, if you have an uptrend and you start selling, you can lose a lot of money because you can't predict what's going to happen. Let's say, for example, in here, you expected the price to reach the bottom wall here, but based on if you have drawn the partial trend line, you would have predicted that the price was going to decline up until here. But you see that it suddenly went up and you have lost money. You may have used heavy lot sizes or anything. You could lose a lot of money if you do that. So if I want to enter a buy trade here, I have to put my stop loss below the price that was closed. You see, the stop losses and take profits are very important. The best location to put your stop loss is where your price has been closed, and you have an a fractals on that swing high, and you have a swing high there. So a lot of people say that if we have put our take profit on 100 pips, we have to determine our stop loss on 50 pips. But that is wrong in my opinion, because the price could reach your stop loss and then go up again, and you see that you will regret determining your stop loss too close. You have to put it in a location where the price was closed, because if this point is open, you're going to have even more decline, and it's going to keep going down. For example, in here we have a swing high, so I have imagine that we have had a buy trend, a buy order, and we had put our stop loss here, and suddenly the price reaches this, it goes up again, and then it retraces to this again, and back and forth. And you see the price was closed here, and as you can see, the price has come close to this, but it's going up again. Or for example, you were here, and imagine you have drawn this Fibonacci, and based on this you have seen that you're in your 61 level, then it declines and you start selling, and you would put your stop loss a little bit above that, and then your stop loss is touched and then it declines again. So you will regret putting your stop loss too close. You have to put it in a location when the price is close. For example, the price here is closed, as you can see. I should put it here. So the price has come close to this, but it wasn't able to go further than this area. And about your take profits, you have to determine it based on your analysis, based on your Fibonacci tool or trend lines, and etc. Standard deviation channel is exactly like the liner tool, but the liner tool is more precise and it has less errors. So they're the same. The next tool we're going to talk about, let me delete these first. Fibonacci arc. It's exactly the same as our Fibonacci resistance. We're going to connect the swing high to our swing low. When the 23 is broken, it's going to reach the 50 and 61 level. Excuse me, when the 38 level is broken, it's going to reach the 50 and 61 level. As you can see, we don't have the 23 level here because 23 level is not an important level. Your 23 level has to be broken so you can start trading. And the best and the safest location to start a trade is when you have the confirmation. And that is where your 38 level is. If the price is having fluctuation on the 38 level, you can start trading until the next resistance says. So that was the Fibonacci arc, and the opposite is exactly the same. As you can see, it has touched the 61 level and it's going up again. And you can also draw a partial Fibonacci with this. You have to consider the last two swing highs. For example, if you have one swing high at the top and one at the bottom, you have to connect them together like this. So this is my partial Fibonacci. If we move on to a shorter time frame so that you can see the chart better, it would be like this. You see, we don't have a swing high here. We consider a point a swing high where it's higher than its two sides. So when it's higher than its two sides, that is called a swing high. Or when it's at the bottom, it's called a swing low. This one is also lower than its two sides, so it's a swing low. We've talked about the Fibonacci arc. Let's talk about the Fibonacci channel. We use this tool in our longer time frames. You can also use it in your shorter time frames, but it's more precise in your longer time frames. Please take notes. The longer your time frame, the more precise your analysis and the less errors in your analysis, and the more useful those analyses are for you. So about the Fibonacci channel, it's exactly like the trend line. Doesn't have any difference with that. In your Fibonacci channel, you have to connect the swing high to your swing low. It has 5 channels, 5 lines, and when the second line is broken, it's going to go up until the third line. This is what I call the first line, but it's actually the second one. But you can get used to it the way I say it. If your second line is broken, it's going to reach the third one. If it's not broken, it's going to retrace to its previous one. So you can trade based on these lines and channels. You can wait for the price to reach each of these channels and you can start a new order there. You see, in here, it wasn't able to break this. So when can we buy? Either when this channel is broken and the price goes further than this area, or if the price is closed from the bottom and it's going to go up from the bottom, for example, like this. As you can see, the price is closed at the bottom and then it has gone up again. But the retracement to this channel here is based on the Fibonacci resistance. You see exactly on our 61 level. It has stopped the price here. Another important point is that you can you have to use your Fibonacci resistance tool all the time in all of your analysis and all of your trends. Don't forget to use this. Don't say that, oh, I have learned the Fibonacci channel or the trend line or other strategies, so then I'm not going to use the Fibonacci resistance anymore. No, the Fibonacci resistance should be your priority. You have to use it all the time. So in all of your analysis, you have to draw your Fibonacci resistance. So it has retraced here. So in here, if the channel here is broken, I can start buying up until the next one and back and forth until the end. But and when your Fibonacci channels are not broken, you can't start trading again. You can take a sell order in those areas when it declines and take your profits there. I'm going to show you another example. I'm sure everyone has problems with this still. Alright, so the swing low at the bottom of the market, I can connect it to my next one. Let me draw another example. Okay, so if I draw the Fibonacci resistance here, when the price is above your 23 level, it may not reach this bottom wall there. But if it's above the 23 level, you can start buying up until your Fibonacci channel. When the Fibonacci channel is broken, you can start buying again up until the next Fibonacci channel. And also, you can use the Fibonacci resistance here. Although, in here it has a little bit of errors, because my main trend was here. I couldn't use it there. I have used it in the middle of my trend. And I told you that every single one of these tools has its certain location. So if I draw it in a longer time frame, you see that it has worked out really well and it's been performed. And the price has reached this wall exactly, then it had retraced, and then it was performed very well. And after that, it's not reliable anymore because the zero line is broken. If I want to show you another example, we can do it here. As you can see, you can't use this tool in every location, but this is a good location. As you can see, I could have started selling here, close it in here. After this line was broken, I could start selling again, and when it reached this, I could have gained my profit. It has gone up a little bit, but that was okay because we've had pivots. hopefully hopefully next session we're going to talk about pivots because they're very important. And they're used in all of your analysis. They will show you where to enter and exit your tradings. As you can see, it's having fluctuations in here, so you can start selling or buying in between these walls and gain your profits. The next tool that we're going to use, there are two tools left that we haven't talked about: Fibonacci fan and Fibonacci expansion. So we're going to talk about these two next session before we talk about the pivots. I forgot to tell you about this, but because we're only talking about your problems right now, I'm only going to review the ones that I've already taught you. So if you want to take an order, I have explained it to you thoroughly. You can go on to your new order. You can choose your volume, your lot size. Each lot size equals $1,000. So if you want to involve $100, you have to use 0.1 lot size. That will be $100. If you use one lot size, it will involve $1,000 in your tradings. If you want that all your sell and buy items, and you can also determine your stop loss and take profits. Because the market is closed right now, I can't take a new order because the market will be opened on Monday again. And on the subject of what zoom you should work on, you see this is your 3rd-degree zoom, which is you should either zoom in 2 times or 3 times. The reason why I tell you this, at least you should work on the 3rd times of zooming, because you have to know what has happened in the past of the market, because you analyze the past to predict the future. So the past is important. Your analysis is based on what has happened in the past. An example that I always use is that zooming in is like you're at the roof of a house and you're looking over at the city, or you're sitting in an airplane and you're looking over the city. You see, these two situations are very different. So the more you zoom out, the better you can analyze the market. I don't think there is anything else that we haven't talked about yet. We talked about the time frames. We talked about what time frame is the best time frame to trade in. It depends on your balance. The less your balance, the shorter your time frame. And also, the heavier your balance, the more your balance, the longer the time frame. For example, the monthly time frame. You see, for example, for $1,000, the 4-hour time frame is good. If you have less than $1,000, you can work on 15-minute time frames. I usually work on the 4-hour time frame, but it depends. I don't usually consider this balance and the reason why I we choose the 4-hour time frame is because it's the best time frame. It has less errors, the technicals are performed better, and it's a time frame that is in between all of the other time frames. So because I do my own tradings based on candlesticks, and the 4-hour time frame you can see very good candlesticks. So when you have learned about the candlesticks, you have to try to work on the 4-hour time frame as well. So if you have $500, work on the hourly time frame. If you have $1,000 or more, work on the 4-hour time frame. So, and also you can work on the daily time frame, which are your long-term tradings, and your weekly time frames are for balances over $10,000. We didn't have any problems about the terminal item. About the market watch, I don't remember if I've had talked about this before or not. I think I have. You see, you have in your market watch, you can see all of the charts that you can trade in. So you have two prices. One of them is the bid price and the other one is the ask price. The bid price is your main price, your broker's price. And your ask price is the price that your broker gives you plus the commission. So if you have done an order on this price, it will be closed, it will be open on this price. So that is the difference between these two. The second one has commissions. And this part of the chart, the tick chart, shows you the fluctuations at the moment. And I told you that this candlestick is Japanese, but you can also use the Chinese, which is shown to you as lines. And I told you that if you want to, when the price is having fluctuations, if you want to push backwards in the market, you can use this tool. And I told you that if you want to see how many pips you have from in a certain distance, you can use this tool. For example, in here we have around 12,000 pips. And you also have 24 daily candlesticks. So in a daily time frame, each of these candlesticks take a whole day to get completed. In a 4-hour time frame, each candlestick takes 4 hours to get completed. It's also the same in your hourly time frame. So about the downtrend, I'm going to draw the trend line again because I know there are so many mistakes. You see, you have to draw it from high to low, from the top to bottom. You have to connect it to a swing low that is below your main one. And about the Fibonacci, you can draw it from high to low. And a more partial one would be this. You can connect the swing low to the last two swing highs. Imagine we don't have this part of the chart, and these are our last two swing highs. And about the Fibonacci's, you have to pay attention to the Fibonacci levels. About buy stop and sell stop, for example, if you want to do a buy trade here, you can right click on it and choose the buy stop here, and it will be saved. If you want to do a sell order in the future, right click and put a sell stop on the market. I hope this session was useful for you. We reviewed everything that we talked about in our previous sessions. We repeated all of them. I hope you learned the market and your analysis in a way that you don't lose. It's impossible not to lose. You see, I've been working on the market for 10 years, but even my analysis are sometimes wrong. But if your tradings, for example, out of 10 of your tradings, only one of them has errors. I hope you always gain profits. Everyone have a good day and goodbye. Hope to see you soon in our next sessions. Good luck.